What is a cash dividend? Cash dividends are payments made to shareholders as a portion of the company's profits or recent earnings, delivered in the form of cash rather than stocks or other assets. The company's management and board decide the dividend amount and its consistency, and brokers often encourage shareholders to reinvest these dividends back into the company for long-term growth. Many investors opt to reinvest to maximize their returns. Cash dividends are typically paid on a regular basis, such as quarterly, but they can also be issued monthly, semi-annually, or annually. Companies with strong, stable cash flows are more likely to distribute cash dividends, as they have progressed beyond the growth stage and secured a solid market position. Smaller businesses, or those still growing, often retain profits for operational needs rather than distributing them to shareholders. Several key dates are involved in the cash dividend process. The declaration date is when the company's management and board announce the approval of the dividend payment. The holder of record date determines the eligible shareholders who will receive the dividend. The ex-dividend date is set 2 days before the holder of record date. After this date, new shareholders are not entitled to the dividend. The cum dividend date refers to the transition period between the ex-dividend and payment dates, during which the dividend has been declared but not yet distributed. Finally, the payment date is when the cash is actually transferred to shareholders. Accounting for cash dividends involves debiting retained earnings and crediting a liability account called dividends payable. Upon payment, dividends payable is debited, and cash is credited, reflecting the cash outflow. Cash dividends are reported in the cash flow statement but do not affect the income statement, although they reduce both shareholder equity and the company's cash balance. Cash dividends are significant because they help maintain financial ratios, attract new investors, and show market confidence. Some companies also offer stock dividends or give shareholders the option to choose between cash or stock dividends, with many opting for reinvestment to support business growth. The main difference between cash and stock dividends is that cash dividends are direct payments, while stock dividends involve additional shares distributed to shareholders.